Before you watch this episode of our cityCURRENT radio show, I want to invite you to join cityCURRENT's e-learning and online personal development platform called GrowthCurrent. I'm Jeremy Park, host of the cityCURRENT radio show and CEO of cityCURRENT. GrowthCurrent is your exclusive ticket to attend virtual events with global thought leaders, national guest speakers, and experts who can help you grow personally and professionally. It gives you access to success secrets, lessons learned, learning modules, and so much more. Being online, you can join us from anywhere in the world. Subscriptions are only $8 a month, or you can do bulk subscriptions for your team. Check out growthcurrent.com to learn more and to join us in our efforts to power the good. And now, on to the show. Welcome back to the cityCURRENT radio show. I'm your host, Jeremy Park. We're honored to be with our next two guests, our good friends. We have Duncan Williams. He's the president of Duncan Williams, Inc. And we have David Scully, who's the president of Duncan Williams Asset Management. And we'll talk all about what those two companies do in terms of their philanthropic engagement, the separation. But how are you two guys doing?
Doing great, Jeremy. Thanks for having us on today.
Yes, sir. Doing great here too. I really appreciate it.
So let's dive in. So you've got some big news on your end, Duncan, in terms of Duncan Williams, Inc. So let's start there, and then we'll dive into the world of Duncan Williams Asset Management. But share the big news with Duncan Williams, Inc.
Well, a couple of weeks ago, we announced that South State Bank has purchased Duncan Williams, Inc. Obviously it was a surprise. I think, and really the questions that have come of what does it mean for Duncan Williams, Inc. And the bottom line is really doesn't mean anything changes. The name stays the same. Thank goodness for me, the leadership stays the same. The great thing is South State is a bank that understands communities, and they know who we are and how important it is for us to continue to support the Memphis community. And we plan on doing that. So what we've done is we've added the 7th or 8th largest bank in the Southeast as our owner. They do not have a FINRA broker-dealer, so basically they've asked us to come in and build one for them. So it's a great opportunity for us. It's a great opportunity for the employees. But even better, I think it's a great opportunity for the city because we're bringing in another big bank that's going to be able to do some stuff in Memphis.
Talk about, continuing obviously the leadership, but the vision and the give back to the community. I think that's another important element is not only does it remain the same for your employees and your team and your leadership, but also the heart remains the same as well. So talk about that aspect.
Yeah, I think, their background is one, they really started with community banks. And so, like I said, it's important. They've always said their communities are important. And they know that was vitally important to me for this deal to work, is that I had to continue to be able to do stuff in this community. The great thing is we have, DWAM and what David's doing over there. I mean, that's its own baby. And what they're doing in the community is unbelievable stuff also. And that will continue. So, we're not going anywhere, and I'm not going anywhere, and we're going to continue to support the great programs that are out there.
So let's tee that up. Give some context to Duncan Williams Asset Management, because as you mentioned, two completely separate companies.
Right.
And when you look at Duncan Williams Asset Management as a standalone in terms of what it does, talk about kind of your launch of that, and then we'll bring David into the equation talking about DWAM.
Yeah, so 5 years or so ago, we decided that it made more sense to take our asset management side out of Duncan Williams, Inc., moved it over to a sole entity, not in the same building. In fact, when we were going through the naming stuff, we had I had a little heartache of having another Duncan Williams name out there. David and others smartly said, hey, dummy, you have a company for 50 years. We're not going to change the name. Let's use and build on it, and let's build another company that's going to last for 50 plus years. So, David is leading a great organization, and I'd say it's like my B12 shot when I go over there. There's so much energy, so many great young people, and they know our purpose, and our purpose is obviously to really serve our clients, but also to improve our community, and that's what they're doing.
So David, let's switch it over to you, president of Duncan Williams Asset Management. As Duncan alluded to, this really creates a powerful new opportunity. You've already got two separate identities and two separate directions in terms of where you're headed, but now really, in a good way, you get to kind of double down and make a difference. So talk about Duncan Williams Asset Management.
That's right. So Duncan mentioned our mission statement, which is serve our clients, improve our community, and then the space we operate in, right, investment advisory stuff, and 95, 99% of our clients are in the Mid-South area. If we take our mission statement apart, the first piece is important, but doesn't really differentiate, right? Serve our clients. We're in a service industry. So if we're not serving our clients, we're going to have a big problem soon, right? The second piece we feel like does really differentiate us, the improve our community. And this is our community. Memphis is our community, the surrounding areas. And so consistent with that mission, we do a lot of different things to try to improve our community, right? There's a lot of different manifestations of that. Sometimes, on a quarterly basis, we're doing service projects. And pre-coronavirus, we're, at Ave Maria Home, playing Jeopardy with the seniors. We're planting trees at Shelby Farms. We're at Madonna Learning Center, painting shingles for the new greenhouse or doing ornaments with the kids. During coronavirus, we switched over. We've done some virtual service projects. And we do those during the week, and the whole office clears out. We make a day of it. But what we found is more efficient for us to support our community, to improve our community, is to identify organizations that are already doing good work and to do things to support those organizations so they can achieve their missions more efficiently or at a higher rate. And so sometimes that support's financial, sometimes it's man hours, sometimes it's networking, sometimes it's joint marketing. Usually it's a combination of these things. But being 100% locally owned and invested in our community allows us to make the decisions, to identify those organizations, and ultimately lift up the entire city.
Give us an idea of all the different things you do. You kind of painted the picture, but I think it's important to dive into the detail of what you do. And so everything from, even on my end, you help me with my finances and my investments. And so you've got the individual investments, you've got the 401ks, you work with foundations. So you cover a lot of bandwidth in terms of the asset management, but dive in a little bit more deeper for the audience.
Sure. And I'll try and keep it brief because we do a lot. And of course, Jeremy, we appreciate your business. The individual is still the biggest piece of what we do, right? We've got 700 relationships, which is about what we have. 500 of them are still the individual. And our average client kind of looks like, the Dave Ramsey Millionaire Next Door. And so it's maybe a married couple that's been saving for a couple decades, and they've got 3 accounts. That's his IRA and her IRA and their joint account and a 529. And you add it all up, and it's maybe $700,000 or $800,000. That's what our typical client looks like. Now, we were very intentional when we launched Duncan Williams Asset Management to have no minimum account size, right? And that's intentional because we don't want to be the investment firm for the city of Memphis elites or the city of Memphis millionaires. We want to be the investment firm for the city of Memphis. And so that allows us to take clients on at a smaller dollar amount and grow with them and offer them the quality advice. And so that makes up a huge chunk of our business. It's the biggest piece of our revenue for sure. But I'll tell you that the fastest growing piece of our business is the retirement plan space, whether it's a 401k, a 403b, a 457, a 401a, a SEP, a simple rate. If a company has an employer-sponsored plan, we'll give investment advice on that. And so when we spun out a little over 5 years ago, we had maybe 4 or 5 plans representing about 4% of our revenue. Fast forward to today, we're working with 105 plans, $400 million in assets, and makes up almost 35% of our revenue. So this is something we do a really good job of. We could spend the whole show talking about some of the things that differentiate us there. But our stories resonate with the business owners and the nonprofit organizations in Memphis. And so we're getting hired at a really high rate there. So, like I said, the fastest growing piece of our business. Third is nonprofit organizations. We're so blessed, right? Part of the reason that we fought to keep the Duncan Williams name with the new company is the goodwill that the original company and the Williams family had built up in the Memphis community. We wanted an association with that. And because of that association, it's really easy for us to call a nonprofit executive director or a board member, board chair, and say, hey, we're with Duncan Williams, and we'd like to talk to you about forming a partnership. And they usually say, that sounds great. Like how soon can we meet? Is Duncan going to be there? I say, well, I don't understand what you're asking. That's not exactly what we're talking about. But the point is we're able to get in the doors pretty easily. And again, when we tell our story, we talk about forming these true partnerships and helping to lift up the organizations that are doing good work in the community, we end up getting engaged on a pretty good clip there as well. And then finally is maybe the most boring, but it's important, We've got a slightly better mousetrap on cash management. And so if whether it's an individual, a company, or a nonprofit, if they've got a pool of money that they have no appetite for risk, but they'd like to get a little bit more of a return than stuffing it under their mattress, we've got an option for that we, not to get into all the weeds of it, but we can reduce risk a little bit by getting full FDIC insurance on the entire thing, called towering, but increase in yield at the same time and maintain a high level of liquidity. And so our cash management stuff has resonated with folks too. So I want to say in a nutshell, maybe in a coconut shell, because I've been talking for 5 minutes here, but it's that's basically, those are our lines of business.
So I'm going to ask Duncan, then I'll ask you. Give me one thing. Obviously, the market has been all over the place. It's been a very odd and challenging year for everyone. But what's one bit of advice you would just offer up when it comes to investments? And you can keep that on the corporate side or the individual side. But what's one bit of advice that you would just offer up there in general to kind of the way to look at this and pursue this?
Well, David's way smarter on this than me, so let me jump in first, and then he can cover up whatever I mess up. So obviously on the bond side, interest rates have been low. They will continue to stay low, we feel like, for the next couple of years. I mean, that's what the Fed continues to say, and I think because of the COVID and everything that's happened, it makes sense. So you're not going to see big returns on the bond side, but what you are seeing is safe returns on the bond side, where maybe you're definitely not seeing the up and down of the stock market that we've seen this year. So, the safe play is in a lot of ways is still bonds, especially when you're talking about institutional stuff when they're just trying to protect. And going forward, we'll see how it plays out. But that's kind of where it is on the fixed income side.
Yeah. Well, David, what about you? What advice in general would you give? Just the way to look at this year, obviously, but to try to take advantage and be on the proactive side.
Sure. A big part of our job, whether we're working with individuals or people making decisions on behalf of an organization, is people often tend to get caught up significantly what's going on right now, what's going on in the next couple of weeks, what's going on between now and the end of the year, where realistically, their investment goals are on a 20-year, on a 30-year timeline. And so they something happens and they want to make a knee-jerk reaction and say, okay, now that this is going on, volatility's increased, let me make some significant change. Let me go to cash. Let me put it all on black. It's another fault. But on the front end, we're very intentional during our investment process to do the discovery, to figure out what are our investment goals, what's our time horizon, how much risk are we comfortable taking, and then we educate you and say, well, between now and when we get to the finish line, there's going to be periods of volatility. There's going to be spikes up, there's going to be spikes down. We want to be intentional about when we would make changes with an eye on the big picture, right? And so a lot of times we find ourselves, instead of wearing the investment hat, we're the psychologist hat, and say, look, we built this plan for a reason. Like, I understand that the market's experiencing volatility, but if nothing has changed with your goals, with your time horizon, right, there's not some reason to do something differently, then we need to stay the course here. Now, we're going to make tweaks along the way, right, depending on what type of policies and regulations get changed, that there's opportunity in a specific sector of the market, then we're going to make some tweaks to pursue those things over a long term. But it's, if I'm giving one piece of advice, it's typically stay the course, right? We're doing this for a reason. Now, I will give you an example, right? I always like to use a positive example where, we'll encounter this from time to time where somebody is very diligent about saving for their child's college, right? So they start off, they put a couple $1,000s away a year, they're making more money, all of a sudden they're putting 5, 10, 15,000. You get to where your kid is second semester senior year, and you've saved $150,000 for college, and surprise, full ride scholarship, right? So that's great. Now, we had $150,000 that we thought we were going to spend in 6 months. Now, what are we doing with this money, right? Is there a younger child? Does this become the lake house fund? And so now we've got something where we should be making changes. The time horizon is different. Our risk is different. Our goals are different. Now we should be making changes.
I think it's also important, as you're talking about perspective and long-term versus short-term and not making knee-jerk reactions, is the understanding that when you see the dollar drop, like in the case of the market, it's not that you're necessarily losing those dollars. It's just the valuation is changing, and the valuation can go back up. And so psychologically, sometimes you get caught in, I'm losing all this money, when in reality, no, it's a valuation and it will go back up again because you're not necessarily losing those dollars. And I think those are important things to keep in mind as well. Psychologically, to your point, is, you become the psychologist in some ways. Talk about, for each one of you, Duncan, did you want to add something to that?
I was just going to say, I think you're right. It is, especially when you're going through a period like we've gone through this year with COVID, everybody's just worried. And so it is a long-term play. We're not here to trade your account on either side. We're here to make wealth grow. And so that the longevity is great. And I think the psychological side, we do play that role quite a bit for sure.
So for each one of you, give me something that makes you excited, because obviously it's been a challenging year, but give me something that makes you excited for Memphis, because both of you are extremely passionate in terms of Memphis and pouring into Memphis and supportive of Memphis in so many different ways. As you both mentioned, in terms of sponsorships and volunteerism and activation. For each one of you, give me something that really puts a smile on your face for Memphis in the future.
Go ahead, Dave.
Sure. So I don't serve on a ton of boards, but I'm on a couple, and we had a board meeting earlier this week for the University of Memphis Research Foundation. And for the last several years, our primary goal has been to get our university where it will be recognized as a Tier 1 Carnegie research institution. And so the numbers for that calculation, it doesn't happen every year. They recalculate about every 3 years. And so the numbers for that, they republish that list are done. They're in. It's in the books. And they told us on our board meeting, not to spoil the surprise here, that we've achieved that. Now, there won't be official, it won't be announced until the fall of next year, 2021. But so University of Memphis being recognized as a Tier 1 Carnegie institution is a huge, huge big deal for Memphis. There was an article in the Memphis Business Journal, I think in July, that said, look, if we ever get to this point, it represents probably about $200 million a year coming in and revenue to the university, but ultimately to the city. And so being able to do that also, it positions us as a city to petition the state for funding for our state school at a much higher level, right? Just if you compare what the state allocates to the University of Memphis versus the University of Tennessee, Knoxville, they get about $2 per student for every $1 per student that we get. And so you say, well, it's the flagship institution for the state. Well, if you say, well, hold on, our football team's maybe just a hair better. The basketball team is competitive. And now we got the Tier 1 Carnegie status as the academic reputation of the school is on the same level. It gives us a really good case for funding. And that's a big deal. I'm very excited about that.
Yeah, that's awesome. That's like breaking news. That's great.
Sure. Well, not official yet. Preliminary numbers.
Hey, it's on an interview. It's official now, Scully. You just messed up.
Okay, what would you add to that?
I think just the economic development. I will tell you, obviously, being involved with the chamber, and as the chairman circle that we've talked about before. It's incredible what's happening down there, and Ted Townsend's just taken over kind of the economic development side for the chamber, and he really is unbelievable. And I went down, Abby and I went down a couple of weekends ago. It was rainy, and we drove downtown. We hadn't been down there for probably in a few months, and really got out. We parked right by the Hyde Foundation building and got out, walked down the railroad tracks and in the rain. And it's just incredible. What Carlisle's building and you just see everything that's happening down there. And it's like, holy cow. Growing up is we didn't go downtown much. And it's just awesome to see the economic development and to see all to see what's happening, with the hotels and the big hotels that are coming in and what Kevin Kane's doing with all the Memphis tourism, even in a hard time. And you just know we've got so much momentum. And honestly, you share it better than anybody else in the city with these shows. And we're so appreciative of that. But I think I'm just excited for the next 10 years, for the next 20 years. I'm excited that my kids will go to school and they'll want to come back to Memphis. And that's what we got to have. And we have so much young talent in the city. And so I'm excited that we're going to have opportunities for them to come back. It's just, it really is an unbelievable thing.
Yeah, I agree. Last question is the easy one is, where do we go to learn more? So talk about website, social media, where do we go?
Sure. Yeah. For Duncan Williams Asset Management, the easiest way to look us up is on our website. It's dwassetmgmt.com. Do it right now if you want to, but we should have a new website in the very near future. And so visit it now, but then come back again in a week. Our phone number is 901-435-4250. The email address is just info at our website, dwassetmgmt.com.
Well, Duncan, David, thank you guys for all you do. You and your team greatly appreciate it. Thank you for being a part of the show.
Yes, sir. Thanks for having us.
Keep spreading the good news, my friend. We appreciate it.